So if Trump wanted to create cause,
Yep.
a senior Fed official ordered Fed staff to find something to deny us. And it's the same person who is,
Wow.
with this level of drumbeat and like almost daily attacking by, grab the popcorn. The SEC did one thing right, and I praised them for it back then, which is that they
You're about to watch an interview with Caitlin Long that exposes the inner war between the Federal Reserve and Bitcoin. But before we get started, I wanted to say that 41% of you guys who watch our videos are not subscribed. If you want to be notified when we drop our next interviews, you need to subscribe now so you do not miss them. With all that being said, let's get into this revealing interview with Caitlin Long, the CEO and founder of Custodia Bank, one of the first Bitcoin native banks in the US. Enjoy. Caitlin, thank you so much for joining me once again on Simply Bitcoin IRL. It's been, I think, almost a year now since you've been on the show. So much has changed.
Yeah.
The new administration,
Yeah.
I want to talk about Operation Chokepoint 2.0, but I think it's a big victory since the last time we talked because our industry was clearly under attack, and it was obfuscated a little bit. But one of the things that you told me that really stuck with me, Caitlin, was in regards to Custodia Bank getting the federal banking charter denied, was you said that the order came directly from the White House. And that never left my mind when you said that. So welcome back to the show.
Thank you. Well, I've learned more recently. I've learned who did it, and we suspected, but I now know. And I also know that a senior Fed official ordered Fed staff to find something to deny us. And it's the same person who is almost certainly the one who gave the order to pressure Silvergate to liquidate voluntarily. I'm putting all this in air quotes. So you're more optimistic than I am, though. There's still work to do. Senator Lummis is right that not all the tools and certainly not all the people who implemented Operation Chokepoint 2.0 are gone. And many of them are, but there's still some left over. It's almost as though the Fed in particular wanted to leave itself a back door. It didn't overturn the worst of its anti-crypto policies that it voted on at exactly the same time as, to your earlier question, the White House announced a anti-crypto policy, the Fed announced an anti-crypto policy, and Custodia was denied, all at 11 a.m. Eastern, all together, all coordinated. Corrupt.
That doesn't sound too much like a coincidence, right? And it's
right.
it's interesting you're saying this because Trump just had a press conference and he's openly calling for the resignation of Jerome Powell, all with, again, the same, basically he's making the case of the corruption. He's basically making the case that, look, he's not acting in good faith. And also the announcement, I believe you retweeted it a couple days ago, from Freddie May and Freddie Mac. And I completely agree with you. I think Senator Lummis has done an incredible job. I had the honor of interviewing her in DC earlier on this year. And one of the things that stuck with me, Caitlin, and maybe you have more information on this, is that Senator Lummis was telling me that their files potentially being destroyed as it relates to Operation Chokepoint 2.0.
That was an allegation that came from the FDIC, from inside the FDIC. There are whistleblowers at all the agency. And by the way, I would encourage those who know of the wrongdoing, you're gonna get investigated. So it is a good idea to clear your names now if you were just the soldier, because the investigations are underway. The only reason you haven't heard much about it in recent months is because Congress has been very busy, of course, legislating the big, beautiful bill, the stablecoin bill, the folks that would be doing the investigation. They've got the market structure bill coming up. I saw that next week is going to be crypto week in the House of Representatives. So they have clearly prioritized, and rightfully so, the legislation. But the investigations, just because you haven't heard much about them, does not mean that they are not going to happen. And it's pretty clear that subpoenas are going to be needed. And there will be a number of people who will be asked to testify under oath. And I can't wait to see who takes the fifth.
And I've been saying this on Simply for the last year or two. I said elections have consequences, guys. You have no idea how important this last election was in
Yes.
November for
Yes.
our industry. It was a big win. I don't know where I get this from. I don't know where I got this saying from, but it always stuck with me, which is if you're not in the room, you're not in the deal, right? And I don't think the Bitcoin or crypto industry was in the room in DC for a while. And
They
I
tried to
think,
kill us
yeah, basically,
under the
it
Biden
actually
administration. Yeah.
it backfired, right? Because it kind of
Yeah,
galvanized our
it
industry and
did.
forced us to really take a position where before I don't think people really cared that much.
Well, in the tech industry in particular, right? Obviously, people like Mark Andreessen, he in the Joe Rogan interview said, look, he walked out of a meeting with the Biden White House where they threatened they basically told Andreessen Horowitz, don't bother investing in AI because we're going to control it all. We're just going to, what Mark told on that podcast, I did not know that the US government had classified entire sections of physics during the World War I to World War II period, and that the White House was going to classify the math behind the LLM models, and as a result was going to take over AI. And so what the White House, I don't know if it was chief of staff, but it was somebody very senior, told Andreessen Horowitz, don't bother investing in any AI companies anymore. And Andreessen walked out and immediately decided to endorse Trump. And it was just it was a number of those kinds of things that the tech industry in particular just went full bore for Trump, and a number of former Democrats, right? Obviously, Elon and Trump don't necessarily have the best relationship anymore, but Elon was instrumental in pushing Trump over the finish line. And to wrap up the thought with your comment, there is no question in my mind, and no question, frankly, in the data, that the crypto voter pushed Trump over the edge.
Yeah, I mean, clearly, I think, specifically for the Democrat voter demographic, right? You're talking
Yeah.
about the younger generations, and the
Yep.
younger generations are extremely pro Bitcoin, pro digital assets, right?
Absolutely.
So
Yeah.
you could definitely make a very strong case for that. Now, I know they try to walk it back at the very end a little bit once I think they saw the data, but I think it was too little too late.
Yeah.
Now, my question for you, Caitlin, is does that hostility remain? Because I know that not all Democrats feel this way
Yeah.
about Bitcoin and crypto. I'm very good friends with Dennis Porter, and when I
Hmm.
talk to Senator Lummis, we've talked about the importance of bipartisanship. We saw that with the Genius Act. It wasn't just a Republican, vote. It was that
Absolutely.
Democrats got
68 total, right? Of 13 of, or 15 of whom were Democrats, because there were 2 Republicans who voted against it. Yeah.
so absolutely. So, where are we right now in terms of the kind of the political landscape regarding Republicans, Democrats? Are there
Yeah.
still is the Elizabeth Warren camp? Does it still hold a lot of influence?
Well, it does. Look at what just happened in the New York City mayoral race. And so you can't say that that's the octogenarians, because obviously he's young, but it's that far left wing is they haven't learned any lessons. And I lament that, because I did not make an endorsement. My company, Custodia, is mixed in our employees, our board, our customer base. So it was not appropriate for me to make an endorsement. And as a result, I had people talking to me on both sides and had tentacles into both sides and was trying really hard. I mean, there's some really great Democrats who are trying really hard to marginalize that far left wing of the Democratic Party. And what they're trying to do in that far left wing, what they really are after, is total control. They want to control our spending. They want to use money as a means of social control. By the way, we typically are taught that money has 3 uses: medium of exchange, unit of account, and store of value. But the Fed itself released a paper saying money has a 4th use, which is a means of total control. Okay, look at the demographic politically of the Federal Reserve itself. I think it's 92% of staff donations go to the Democrats. It's very skewed. And of course, when you look at an organization that hires academics, right, especially from the economics field, also very skewed. And then just look at the board of governors. It's 4-3 Democrats, and that's counting Powell as a Republican. I think Trump would question that. So long story short, it is not a Republican agency by culture or by leadership. And it still today is not, right? This is part of the problem. So a lot of folks are in the crypto space very, very, rah that all these tools that were used to implement Operation Chokepoint 2.0 are gone. No, they're not, in part because the people are still there. The person, the Fed's debanker-in-chief stepped down as vice chair for supervision, Michael Barr. He was intimately involved in the Custodia situation, and I know a lot. There's some bombshells about our situation that have not come out yet, and I have to sit on them for now. But he didn't resign from the Fed. He just stepped down as vice chair for supervision. And so he's still going to be on the Fed Board of Governors unless Trump fires him for cause for, I think, another 12 years. I'm pretty sure he has a full 14-year term, right? And so, it's interesting because you made reference to the fact that Pulte is, who's the head of Fannie Mae and Freddie Mac, the FHFA agency, has publicly called on Trump to fire Powell. The drumbeat is growing. I just saw Peter Navarro on a business show calling for that. Right? It's the surrogates are really out there raising the level of pressure on Jay Powell, and the questions in the academic community for a while have been: can a president fire a Fed governor not for cause? There's no question that the president could fire for cause, in my interpretation. And so the question is, has there been cause to fire Powell or Barr or someone else? And I certainly could construct a cause case if I had to, based on what I know. And what I know is built mostly on public information. Let me give you an example. Just last week, the U.S. Treasury sanctioned 4 banks in Mexico for laundering money, it alleged, although it's sanctioned, so it took action on this, laundering money for the cartels that were involved in the fentanyl trade. One of those Mexican banks got a Fed master account in 2021 after Kraken and Custodia applied for ours. So, and it's still open, by the way.
Hold on a second.
So,
I just want to repeat this because this just blew my mind.
yes.
You're saying a bank that enabled or banked Mexican drug cartels got a master account.
So says the U.S. Treasury. Yes.
Got a master account
Yes.
before any pro-crypto, pro-digital asset banks. Is that what you just said?
Correct. Even though 2 of us had applied before that. Go look at it. That bank got its master account in 2021 under Jay Powell. Okay, so if Trump wanted to create cause, there you go, right?
I think it was created with this idea that the Fed is supposed to operate as an independent entity, and it obviously benefits from it, quote unquote, being independent. But I completely agree with you, Caitlin. Like, it's my job to cover the Bitcoin news every day, right?
Yeah.
It has not acted apolitically at all. It's acted extremely politically, to the point that you can even make an argument that they were trying to help Kamala get elected in terms of lowering the rates, raising the rates.
Well, that's the allegation. That why with the unemployment rate and inflation where it was last fall, did Powell lower rates, and why is he, with unemployment and inflation where they are today, not lowering rates? It's upside down. That's the allegation that Trump is making. He did make a big point, and so did Secretary Bessent, that the Fed needs to remain independent for monetary policy purposes. The things I just talked to you about with master accounts and, the Custodia applications, the Silvergate situation, that was bank supervision, which is a different part of the Fed. And there's a big push on the part of Secretary Bessent to bring the 3 federal banking regulators, which have overlapping jurisdictions and fight with each other all the time, although they did unite against crypto very clearly, but to bring those 3 federal regulators together under one roof. And by the way, last Friday, I thought there was a very significant interview with Secretary Bessent when somebody asked him, might you actually do both jobs, both the Treasury Secretary and Federal Reserve Board Chair? And he got a smile on his face when asked the question and said there's precedent for it and said he'll do whatever Trump wants him to do. So watch this space, because with this level of drumbeat and like almost daily attacking by Trump, it's grab the popcorn.
Yeah, absolutely. It's with the whole Elon fallout, this last election cycle was crazy. But I think the question that a lot of people have on their minds, Caitlin, is like, we did our job as voters. Like we
Yes.
came out, we got the Republicans the House, we got the Republicans the Senate, and we got the executive branch.
Pro-crypto people.
And
generally.
Exactly. So
Yep.
put the political parties aside. Let me rephrase
Yep.
that. We got the
Yep.
pro
Right.
Bitcoin digital
Yep.
assets people
Yep.
in power. We
Yep.
elected them in power. And now, what do you mean Operation Chokepoint 2.0 is not done? How come you haven't gotten your account yet? What's going on here?
Well, the federal agencies are still stuck with a lot. Like I said, go look. It's not difficult to call up the political contributions of the employees of the different agencies of any company. You can look it up. Do they lean right? Do they lean left? And the federal agencies have historically leaned, the federal banking agencies have historically leaned very left. And so you got the career staff there. Now, last week, there was an announcement, and I commented on it. Most folks wouldn't know the name of the senior career staffer in Fed supervision and regulation, but Nick Carter put him on his who's who chart. So it wasn't just political people. Nick put that guy, Michael Gibson, on his who's who chart. And there was an announcement. It was a story in Axios last week that Michael Gibson was taking. He had announced that he was going to leave at the end of this year, but he was taking an early resignation offer, I think was how they phrased it in Axios. And then they listed a couple of other names, and I happen to know some things about those other names. So I looked at that and said, all right, there's a little bit of house cleaning going on here. And I'll just point to what Nick said about Michael Gibson's role in Operation Chokepoint 2.0. He showed up. His name showed up way back when Nick first put that chart out in early 2023, I believe it was. It's more than 2 years ago. It's amazing how prescient that was, the work that he did. Hats off to him, because back then, nobody was talking about this. You didn't have the Mark Andreessen, boost of it that put it in the national conscience. And he was just talking to, regular folks on the ground and putting the puzzle pieces together. And that was really a great piece of journalism.
Yeah, absolutely. And it's really interesting, too, because I remember my co-host and I, Caitlin, we went through this kind of cycle in our minds where we're like, wait a second. They don't know any better. They don't know. And then we finally came to the realization, because it wasn't just one giant regulatory action. It was regulatory action. It was like
all of
the
government.
strategy was death by 1,000
Absolutely.
regulatory cuts.
And trying to sue everybody into existence, or in our case, force the lawsuit into existence, and then debank us 5 times, trying to make us go away, right? Yeah. And that lawsuit would have gone away had we not been able to survive.
Yeah.
One might put 2 and 2 together that might have been a tactic that they had. But in the SEC's case, it was the SEC actually suing. But these lawsuits cost a fortune and, hurt the industry, helped incumbent banks relative to the startups. Classic innovator's dilemma type stuff. And it happened in a very, very big way. And like I said, there are a couple of other things, I would call them bombshells, that I'm sitting on that will come out. It's going to be interesting to watch the reaction when they finally do.
So you mentioned this individual, Michael Gibson, and I'll say the quote. So apparently Michael Gibson said, find something to deny.
No, that was his boss, Michael Barr.
Michael Barr
Yeah.
said, find something to deny Custodia Bank. I mean,
Yep.
If that is not the very definition of a political, order, I don't know what would qualify for it instead.
Well, and then the other thing is, a lot of people don't know this, so I'll apologize for those who do, that it's repetitive, is that they broke Fed policy of not talking to the press because Bloomberg called us right before the denial and said, hey, all the companies with crypto in their business models at the OCC and the Fed have been asked to withdraw their applications. And it was true. Somebody tipped them off, obviously, somebody who knew, right? And this was confidential information. It had to have come from inside the Fed, but that was during a Fed blackout week when their policy was not to talk to the press. So somebody leaked to Bloomberg, and we refused to return Bloomberg's call. So they finally sent us an email and put it in writing. So we have it in writing. But when we finally talked to the Bloomberg reporters, what they told us was that they knew that the Fed board was going to vote Custodia down. And Nico, that vote, when they told us that, it was 2 days before the vote occurred.
Wow.
So the corruption behind the scenes is staggering. Yeah.
They leaked the information to the press before you got the official answer.
Before even the vote. Correct.
So,
yes.
So Caitlin, okay, so let's break this down. Let's be logical about all this, right? So they've clearly acted politically. I think something that we've noticed, you have experienced. Trump is even still getting pushback, even though he's been elected into office. What other avenue do we have to change the system? I mean, isn't voting supposed to be the self-correcting mechanism that the American people have to, change the direction of which the country is heading? Like, well, because I'm looking at this and it's like we're 7 months into Trump's term. And, he has kept his promises in terms of freeing Ross, in terms of the strategic Bitcoin reserve, which I'm going to ask you about in a little bit, in terms of obviously, at least slowing down Operation Chokepoint 2.0,
yes.
the repeal of SAB 121.
Yes.
Right. But where do we go from here? I mean, like, if we can't do this by getting the pro Bitcoin people into office, what else can we do? Because from my angle, Caitlin, it looks like they're trying to play the delay game until the midterms.
Well,
right?
Try to delay and try to make the startups bleed cash so that the incumbent banks can come in and take over. In fact, one of my good friends said, unfortunately, the Fed and the justice system slowed you down so much that JP Morgan had a chance to catch up. And he's not wrong. But whether that was on purpose or not is the question. And maybe someday we'll get the actual answer to that. But back to your point, you're asking a question about whether elections really do have consequences on the regulatory level. And this gets to the question of whether the president of the United States is actually in charge of the executive branch or not. And what Congress has done over the last 150 years is set up all these independent agencies. A lot of them are under the executive branch, but not all of them. And these independent agencies, of which the Fed is one, the FDIC is another, the SEC is another, right? These are not part of the cabinet. In the cabinet, it's very clear that a new president can come in, fire the political staff. And then the career staff, by the way, I've learned from working with government over the last decade, the career staff oftentimes is more powerful than the political staff because they've been in their jobs for 35 years. They ignore, restrictions on lobbying, and they're the experts that get called in to testify on the technical aspects of bills. So the career staff is certainly a bit of an issue because their attitude is every 4 years they get a new boss and they've outlasted how many presidents, right? So if they're anti the current regime, they can do a lot of damage. That's a problem in and of itself. But there has been, and you'll see, you're seeing a lot of litigation over this whole question over whether the president can fire independent agency heads. He definitely can fire the agencies under the cabinet, which are executive branch. But this whole concept of an independent agency, I think you're going to see the whole question of that be tested at the Supreme Court. Trump is pretty clearly pushing that. He went in and fired some heads of, I think, the FTC. There's a case called Humphrey's Executor and a lot of litigation around that Supreme Court case that get at does the president need cause, or can he fire independent agency heads? And then it gets to the real question fundamentally underneath that, which is, are independent agencies even constitutional? The U.S. Constitution has 3 branches of government, but what has effectively been done with these independent agencies is, are they legislative agencies? Are they executive agencies? We know they're not judicial agencies, right? So what if they don't fit in any of those 3 branches of government? Then effectively, they've created a 4th branch of government, and are they constitutional? And I think that question will be answered during Trump's term.
And again, they're unaccountable, right? And I
But
think
that's the point. Yeah.
this is
Yeah.
the root the root issue. And some people come up with the term, which I think is too conspiratorial, because I think it's right up in your face. Some people call it the deep state. I don't think it's called the deep state. I think it's the administrative state. It's basically unelected officials that remain into power regardless of who gets elected into political offices, which is what you're referencing.
Right.
And they hold a tremendous amount of power.
Yep.
And I think the last 4 years has shown that. But I think the only reason that as to why our industry started to care is because our industry started to get affected by this,
We got
right?
targeted by it. The administrative state across the entirety of the U.S. government was aimed at trying to kill our industry. And it was not just the banking and securities and commodities regulatory agencies. It was things like the, EPA over Bitcoin mining and the Department of Energy, and then the Department of Labor over whether Bitcoin could be in a pension fund. They just literally went across the entirety of the U.S. government and used every lever that they could to try to stop this industry. And it uncovered for a lot of us the magnitude of power and of lack of control of the U.S. voter over the government. And the government, I heard a recent line that the government has gotten to the point where they think we work for them, but in fact, actually, they're supposed to work for us. But it gets now down to this whole question of, is that really the case? And has the system been so screwed up? I mean, look at what Doge was able to find, but then look at how Doge got stymied, right? Originally, I remember, and I got excited and tweeted at the time when I happened to be down in Arizona for a loved one's cancer treatments. And I remember sitting in the hotel watching the live Madison Square Garden rally where Howard Lutnick was talking about with Elon that they would cut $2 trillion of spending. And I thought, well, if they pull that off, that would just be huge, because the private sector economy would just soar if they were able to do that. And then it was 1 trillion. I think it was 1.5. And then it was 1 trillion. And then it was 500 billion. And now it's 140 billion. And oh, by the way, Congress didn't codify those cuts. So, and all the Doge people are quitting, and I don't blame them, because to be honest, they got stymied, right? And so if Elon, with the backing of the president, can't pull off that much cutting of obvious fraud and waste, like Social Security recipients being older than the United States itself and still having those checks cashed, come on. It tells, to borrow Lynn Alden's phrase, nothing stops this train. This is obviously one of the things that causes folks to get excited about hard assets of finite quantity like Bitcoin.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
One of the most beautiful things, one of the most untalked about characteristics of Bitcoin is that it exposes incentives.
Yeah.
And I think what's being exposed here are essentially incentives. And you start to ask yourself, that I didn't sign up for this. This is supposed to be a government by the people, for the people.
Right.
Is it really a government by the people, for the people?
No.
And I think the last 7 months, you had essentially a star team of players. You had Tulsi Gabbard, RFK Jr., you have, originally it was Matt Gaetz, now it's Pam Bondi. You have, of course, JD Vance, you have President Trump, right? You have this, coalition of what you could call moderate Democrats,
Yes,
10,
many of
15
them.
years ago.
Right.
And it was a coalition between moderate Democrats of 10, 15 years ago and, conservatives. And they came together because they felt this overreaching, bigger and bigger and bigger government. They came in there. they got the keys, but nothing's really changed that much.
Nothing's really changed it, right? And when I look at, I was very, very, very focused on Tulsi Gabbard because I think she's an incredibly principled person and an actual member of the U.S. military in reserves and goes on, her active duty rotations. So somebody who I have trusted on the war issue. And she testified in March that Iran was not close to enriching uranium. I have no idea what the truth is. I think there's so much propaganda, but she then came out afterwards and said, no, Iran was close and I was wrong. So now I'm scratching my head and I'm seeing this kind of happen with RFK as well. So far, they haven't been able to sort of flip him. What I don't know, and I can't wait until Tulsi can talk, because I'm dying to know the answer to the question. What was the real truth? And were you towing the party line? And I understand, and people do tow party lines, but there gets to a point where if they're forced to tow the party line and they're doing something that viscerally goes against their principles, they have one and only one thing they should do, which is resign. And she did not do that. So I don't know. One of two things is true. Either she's not as principled as we all thought she was, or she was wrong when she testified in March and the uranium really was there. And that's why she said what enriched uranium really was above 90%. And that's why she ended up supporting the president. But these kinds of things happening, it raises the question whether the folks that went there, got bogged down by the swamp or not. I think it's fascinating to watch, folks who are really truly outsiders go and get chewed up by the meat grinder. And it's part of the reason why I'm really glad I moved back to my native Wyoming. I lived in New York for almost 30 years. I worked in Washington. I was a White House intern in 1992 under Bush. I was in graduate school, but I actually was in the West Wing a lot as an intern in graduate school. Was right up close to power, and I saw it and I ran the other way because there was so much happening that I didn't consider ethical, and I didn't want to, I'm too principled. I didn't want to have to bend my principles to, for power. And it's funny because as a little girl growing up in the 1980s, watching movies like Wall Street, Michael Douglas's original Wall Street, I used to think Wall Street was the unethical one. I actually think Washington, D.C. is more so. Some of the most unethical people I've come across have been on this recent journey with having been an applicant at the Federal Reserve. And the more I learn about what happened, and again, it's not the people on the ground, it's the people in the higher up space. The more I learned about what happened, the more I realized rules for thee and not for me.
Yep.
We submitted a inspector general complaint. And we know that went into the circular file. And there's a problem because when the inspector general, which is kind of like an internal audit function for these agencies, when the inspector general reports to the people they're supposed to be investigating, what do you think happens?
It's like, investigate yourself, please. Find
it's
wrongdoing.
It's a screwed up system.
Right.
It's a screwed up, corrupt, small c corrupt system. Yeah, and it needs to be fixed. But as we were just talking about, one of the easiest ways to protect yourself and help yourself opt out is to be a first class Bitcoin citizen. Own actual on-chain Bitcoin that you self-custody and run a full node so you do not have to trust anyone else. And
Absolutely.
you can confirm that you own your assets, and when you transact with them, that you're transacting with real on-chain base layer Bitcoin, and you're not even relying on somebody's block explorer to confirm that your transaction went through, so that you don't get man in the middle attacked. That's what you do to opt out of this system.
I want to give a shout out to our partner, Ledn, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledn.io/simply today, and you'll get 0.25% off your first loan.
Absolutely. I completely agree with you. And it's funny that you mentioned the story about you interning at the White House in 92. So first time, not my first time in DC, but first time in DC, walking through the halls of Congress, going to a senator's office, you feel the power in the air. It is a
Yeah.
very, very surreal feeling. And I definitely understand a little bit of what you meant by how you were describing it. Now,
By the way,
Caitlin,
correction, it was 91. I had the year off. Yeah, but what you're talking about, I remember when my boss, because working for the domestic and economic policy head, Roger Porter. He still is at the Harvard Kennedy School, and that was who selected me to be his intern for the summer. And he sent me up to a congressional hearing, and I remember being so proud that I had a White House notepad, because I was this little kid, from Wyoming, and working at the White House, and I had a White House notepad when I was covering this hearing up at the Hill. But actually, kind of one of the things I regret in my career was he asked me to write a memo recommending whether he should renominate Alan Greenspan as Fed chair. And I had not read Mises and Rothbard and Hayek at that point. I knew who Hayek was, but I had not read his economic theories in particular. And I wish I could take that one back. I was an intern. They wouldn't have paid any attention to me at the end of the day if I had recommended that Greenspan not be renominated. But that was Greenspan's first renomination. And he was the person who created sort of the imperial Fed chair. The Fed Board of Governors used to be a lot more balanced than it is today. There's sort of an imperial chair. And by the way, I know a lot about that. I've talked to a lot of insiders there, and I've heard a lot of stories about how imperial they are. The top one or two people at the Fed will try to just like block out staff access to every other Fed governor. I know in one instance that one Fed governor was making appointments to go talk to people on the Hill, and that another Fed governor would cancel those appointments and slot himself in instead. Just crap, just power games. But what it means is that there is an incredible amount of power concentrated in the Fed chairman, and that all started with Alan Greenspan. And I wish I could have that back, although I recognize I was just an intern. They wouldn't have listened to me if I had said, no, don't renominate him. Here's why.
and they're unelected, right? They're appointed,
Of
right?
course.
And
Right.
I think what we're finding out right now is how much power they have. They're basically, Powell is acting as if he could do whatever he wants,
Yeah.
even though, he should be lowering rates by now. I do agree with Trump. But Caitlin, I do want to pivot the conversation to something that me and you and Larry Lepard, we were all on the show together. We were talking about this 2 years ago. And it's a topic that I know that you love. The topic of rehypothecation. 2 years after, right, we had this conversation, the ETF was approved, right? And it happened in January of 2024. And now what's happening this cycle is the Bitcoin treasury companies,
Yeah.
which the vast majority of them custody their Bitcoin with Coinbase, right? So we know it's possible to have a public, Bitcoin address that anyone could audit. Tether, the Tether guys have done it. Paulo literally
Yes.
copy pasted it on X.
Yes.
94,000 Bitcoin. The country of El Salvador, they have a public reserve, right? So we know this is possible, but we
Yeah.
know, and I'm not going to name any names, but we know that certain treasury company
Yeah.
CEOs are just like, no, the security. And I was like, that's not a really good answer to me. I mean, what do I know? I'm just a Bitcoiner. So has the rehypothecation risk increased or decreased since we had this conversation with Larry 2 years ago on the podcast?
The answer is both, because 2 years ago this was right after the blowups of BlockFi and Three Arrows and Genesis. They were rehypothecating very clearly, and of course, I'm forgetting the name of the be your own bank guy, Alex Mashinsky. Celsius, thank you. Celsius, right? They were clearly rehypothecating. And by the way, so was FTX. So very clearly, there were a lot of paper Bitcoins. There were a lot of Bitcoin IOUs not backed by real Bitcoins, is what I mean there, in those very highly leveraged companies that rightfully blew up, and perpetrators in many cases, though not all, are in jail. They all deserve to be, and probably even more than will ever do time, because they committed a fraud on the part of their users. Now, here come the ETFs. The SEC did one thing right, and I praised them for it back then, which is that they prohibit in the prospectuses for the Bitcoin ETFs the custodians from rehypothecating Bitcoins. Now, they don't have to publish their reserves for proof of reserves. I wish they had gone that far, but at least there's a prohibition on rehypothecation. And, frankly, I don't know how examined these entities are. I don't know whether they're actually complying with that rehypothecation prohibition. My fear is that they're not, but at least the SEC did that. They kept it so that those ETFs could not end up being massively rehypothecated at the base layer custody of the actual Bitcoin. The securities, the ETF units themselves, are rehypothecated, probably 20 times at this point, because they're very liquid. So be careful, right? If you don't own actual base layer Bitcoin that you self-custody in your own wallet, then you're exposed to this counterparty credit risk of your custodian not having the actual Bitcoin that they say they have. So then the next layer of potential rehypothecators is just Wall Street firms. They have been prohibited by the Fed. Remember, I said the Fed's still blocking the big banks. The big Wall Street firms are all big banks. Not all of them. Cantor Fitzgerald is not, but most of them, Goldman, Morgan, Citi, JP Morgan, Bank of America, they are all Fed regulated, and they can't hold Bitcoin on balance sheet yet. The moment they start to be able to hold Bitcoin on balance sheet, there's going to be a huge rehypothecation wave again. But then you asked me about the Bitcoin treasury companies. So far, I have not seen that they are rehypothecating. And to be honest, in a lot of cases, they're hardcore Bitcoiners like us who understand that if you rehypothecate Bitcoin, all you're doing is recreating the problems of the existing system. And so they're not playing three-card Monte so far. I'm not saying that I can attest to that. So do your own research, go look at the filings for every one of these companies and see if they commit not to rehypothecating. If any of them does, frankly, please put it out on Twitter, because that's what happened with BlockFi and Celsius. People just reported on them. People who were looking at their customer agreements were saying that they were rehypothecating. It was there in black and white. And so, some argue that customers were warned about this. I look at it and say a lot of people, if you ask some random person on the street, what does rehypothecation mean? They would have no idea. And so if they were reading the prospectus, if they were bothering to read the prospectus, they wouldn't, if they saw that, understand what it really means. But when you tell them what it really means, everyone would just recoil in horror and say, are you kidding me? I'm giving someone money and they're turning around and lending it and might not have it when I want to and when I have the right to redeem it. But yes, that's what happened. So I would throw back to your viewers, if any of you know if any of the Bitcoin treasury companies are rehypothecating, bring it out. Go find it in the prospectuses. With AI, it's a lot easier to find that kind of stuff now than it was in the past. Bring it out. Let's get out and let's help each other learn and do the research on whether these companies actually have the Bitcoin that they say that they have.
So the reason I asked this question, Caitlin, is first of all, I really enjoyed that podcast that we did with Larry.
Yep.
And then I recorded one with Greg Foss and James Lavish, and then they took the other side. But I really enjoyed that. But the reason I did that question was to follow up to see if what your view is on it now, but also because of the price. And why am I talking about this? So generally what tends to happen in Bitcoin cycles is the year after the halving, it tends to be a very good year for Bitcoin, right? And since Bitcoin's inception, we're sitting here 7 months into the year. Trump on inauguration day, the price of Bitcoin was at 109,000.
Yeah.
Right now, the Bitcoin price is at 109,000. Bitcoin has been a stable coin for 7 months,
Yeah, right.
essentially,
Yeah.
right? So, I'm thinking, I'm like, this is kind of strange. This is kind of weird. You're getting all these announcements from all these treasury companies, all these ETFs. They're buying vast amounts of Bitcoin, more
Yeah,
Bitcoin that's being mined on a daily basis, and the price
no
action
doubt.
is not reflecting that.
Yes.
So that's the motivation as to
Yeah.
why I asked you the initial question.
Yeah, and I think the most rational explanation that I've seen is, look, $100,000 was a one of those price points that is just psychological, that a lot of people who have owned it a long time, had laser eyes till 100K. And then I was one who took my laser eyes off, right? That tended to be um, a, a, a trigger point for people in their minds that they would sell at 100K. And we just saw this past weekend, the 4th of July weekend, a whale that had owned a lot of Bitcoin since 2010 woke up. I have my suspicions as to who that is. I don't think it's any of the people that have been talked about. But it's just because I know how that person thinks and transacts, and it might be that person just rotating their keys. I think that's my sheer, somewhat educated guess. I don't think it's a real seller, but that's the kind of stuff that overhangs it. Somebody's actually selling. Definitely, somebody's actually selling. That's the reason why, despite all this buy pressure, we're not seeing the price increase. What you're getting at, I think, is the question of whether it's all the financialization, the leverage-based financialization that's caused it. There's another piece that I missed earlier, which is all the derivatives, which cause the exchanges to delta hedge, and that can cause some price pressure as well. I don't know if that's big enough to be causing this price pressure. The derivatives markets in Bitcoin are still pretty small in the grand scheme of things, and they're still mostly mostly cash-based, cash-settled transactions, not physical settled transactions. So, at this point, all I can say is just be careful. We used to have the proof of keys days that Trace Mayer started, that would have started the entire or did noticeably cause exchanges to have to hold more liquidity to try to keep the exchanges honest, back in 2017, 2018, when all that got started. We don't have anything like that right now. I like the idea that some of the ETF managers have asked the SEC for permission to allow for physical settlement. You can do that in some commodity funds, that instead of actually selling your unit, you can actually elect to take physical delivery. There's no reason why we shouldn't be allowed to do that with a Bitcoin ETF. And if we get those funds approved, those funds are functionally proof of reserves because of the fact that you can physically settle and get your Bitcoin. It's still not as good as an actual cryptographically proven proof of reserves, but it's pretty close because you can physically settle. In a lot of these cases, it's still cash settled. ETFs are still cash settled. You can't take your physical Bitcoin. So what I was alluding to was that the futures and options markets are pretty tiny, but futures markets have gotten pretty big, but they're still cash settled. So now we're back to the debate that is the tail wagging the dog, and futures are driving the spot price. I don't think yet, but all this is in the milieu. It's all in the mix, and all of it ultimately is influencing the price. I just look at it and say, if those, especially for people who are getting into the Bitcoin treasury game, which I applaud companies, I know of more coming, I applaud them for getting into the Bitcoin treasury game, because Michael Saylor shouldn't be the only one. And frankly, it is a concentration risk. I do worry about what's going to happen when and if there's ever a contentious fork in Bitcoin again. I suspect there will be. You see some of the fault lines. You see all the quantum discussions right now. You see some of the, blockchain spam discussions right now. There are fights, legitimate disagreements among the developers in the space. And we could end up having another 2017 big split between communities here. And the more that is concentrated in the hands of the few, especially if they're not true believer hodlers, the more I do worry about how Bitcoin will be able to keep its decentralization. We need to stay vigilant. I agree with Jameson Lopp that this whole it's not atrophy or entropy. What's the word that he uses for essentially basically never changing Bitcoin ever again?
Ossification.
Ossification. Thank you. That ossification debate, I am absolutely on the side of Jameson and other developers who say you have to be able to upgrade the technology, but recognize that sometimes when you upgrade it, especially for things like quantum vulnerabilities that may come down the road. Lynn Alden's book also details a vulnerability that's coming in 2049. We have to, if we ossify, then we are not going to be able to defend Bitcoin against those kinds of vulnerabilities. We have to keep it decentralized, keep it user activated, keep it user and full node runner controlled, and not have too much concentration in the hands of too few people who are especially not philosophically aligned.
And let's talk about that. And it's interesting that you bring this up, Caitlin, because you reposted one of my posts on X where I was basically saying, hey guys, I'm running knots. I don't have to explain as to why I'm doing this. This is just what I believe. And you reposted it and you asked a very interesting question. You said, I wonder how many people that are new to Bitcoin, that are entering Bitcoin through the financialization of Bitcoin, through the ETFs, have any idea what Nico is talking about. And the thing is, with what you were bringing up, because you made some very, very valid points, which is the only reason that the block size wars went the way they did against Jihan and Roger, which had the most powerful Bitcoin ASIC manufacturer in the world, and then Roger had a whole lot of coins. The only reason we were able to win that was because there was sufficient amount of decentralization, right? And the more and more people get essentially thrown into the ETFs, and they don't have Bitcoin in self-custody, and they're not running a node at home, they're basically giving that vote away to a third party who might not have their best interests at heart.
This is why I think it's so important for us to go for physical settlement on those ETFs. Because if you don't like how your ETF is going to vote in something like that, you need to be able to take your physical Bitcoin and vote it yourself.
Absolutely. Absolutely. So, Caitlin, I want to ask you about Custodia. So what is the current status? You've been at the vanguard, the forefront of this. I applaud you for that. Resisting the machine, the behemoth. And what is the latest and greatest? Because I mean, we got Trump in office. We did our part as voters. What's going on?
Well, we're still waiting for the regulatory clarity. Like we talked about earlier, the bank agencies have not given it yet. Trump did get one of the key appointments in the banking agencies, Governor Bowman at the Fed, into that vice chair for supervision role. As we talked about earlier, though, she's one of 7 votes on the Fed board, and Democrats control that Fed board. So how much can she get done is an open question. He has not nominated a FDIC chair. He has nominated an OCC chair, but I don't know what's happening with the confirmation. It's not been quick. So basically, the agencies still have to turn over, and that has not happened yet. So with Custodia, we're still plugging away. They didn't kill us. I think every day they look at us and try to figure out whether they succeeded at killing us or not. And they didn't kill us. We survived. That's the best thing we did. Obviously, it's interesting to watch all the crypto companies trying to do the same thing we started doing 5 years ago, which is getting a bank charter and applying for Fed master accounts. Several of them have done that now. They're not doing full-fledged bank charters. They're doing trust company charters in most cases. There is a difference. Banks can take deposits of US dollars. Trust companies cannot. And it's going to be interesting to see how the banking agencies deal with that whole question of, can you run a crypto company, including a stablecoin issuer, using a trust company charter? It's not been done yet. At the federal level in particular. Some states have done it, but they're not actually taking deposits. There's always a bank partner behind them. What they're trying to do now is create a trust company that gets a Fed master account for a tiny fraction of the capital that a bank has to hold. I'm not sure that's going to be that easy. It's going to be interesting. I think there's going to be litigation over this. I think it's not going to be a quick path. And I like where we are having a depository institution charter. We're still waiting for that Fed master account. It'll be 5 years in October that both Kraken and Custodia applied for our Fed master accounts.
Well, you are doing Satoshi's work, Caitlin, and I just want to give to our audience, like, what is the important, because a lot of people perhaps don't, I had to learn this to cover it properly, to interview Caitlin, but why is it so important to have, for a bank to have a master account? And what is so unique about Custodia? What is the value that Custodia is going to bring to the Bitcoin and crypto and digital assets ecosystem? And why is it needed?
Well, for one thing, solving Operation Chokepoint 2.0. And for another, it's the understanding of how to bridge the two ecosystems safely. The Bitcoin ecosystem and crypto plus the traditional financial systems, and do it in such a way that you don't hurt either one. What happened in 2023 and 2022 with FTX's failure is that the two systems hurt each other, right? We had the traditional banks debanking the crypto ecosystem, and we had certain elements of the crypto ecosystem causing losses at banks. I don't want either one of those. Frankly, if both sides had done it right, they would not have hurt each other. But of course, we know how much the regulators were responsible for all the targeting that happened. They were essentially using their powers behind closed doors to pressure the banks not to bank this industry as a means by which to kill us. And nobody was more targeted than Custodia was in that. So what's the answer going forward? We haven't talked about stablecoins yet. And I know in the Bitcoin ecosystem, a lot of people hate stablecoins because they view the US dollar as a shift coin. And they're not wrong.
I love stablecoins. They're a Trojan horse for Bitcoin. That's my stance.
Yes, they are an on-ramp to Bitcoin. It's funny. I gave an interview. I think an American Banker is one of the traditional sources, and that's what they said. That was the highlight that they pulled out. That stablecoins are an on-ramp to Bitcoin. And I absolutely believe that. Most people are not especially in the developed world, are not willing to hold all of their savings in a volatile asset. And Bitcoin, in spite of the fact that as you rightfully said, it's been a stable coin since January, effectively, because the price is flat. It is actually too volatile. And so folks in emerging markets want to save in dollars, but they will ultimately make their way to Bitcoin. Folks in developed worlds are interested in Bitcoin as an investment, but they will still use dollars to transact. And that's what stablecoins are. And so we've had it in our business plan at Custodia to issue a stablecoin as an ERC20 token and as a liquid token. Liquid is a side chain that pegs to the Bitcoin blockchain. So the ultimate underlying security for liquid is the Bitcoin blockchain itself. And of course, we got blocked. But stay tuned, because we've done a lot of work on commercializing this, and we do have a partnership. You've probably seen we've done 3 transactions, not just little proofs of concept in some test net somewhere. We moved actual money, not large value, but we moved actual money, which is the most important thing, because we actually issued, and we did it with the approval of regulators. And it's been a process. We started in March. We've done 3 live transactions. One was just a volley to between customers. The second one was a volley to a company in Mexico and back. And the third one was a geolocation triggered automated smart contract type payment. So what are we doing? We are commercializing this. You will see announcements coming from us and Vantage, our traditional bank partner. They are absolutely a traditional bank run by IT guys who really get it. And they've been a really terrific partner. And they just understand the bank technology piece at a visceral level, and they're believers in digital asset technology and decentralization. And they, like us, want to be a bridge to both. They're doing a tokenized treasury fund in another part of their business as well. So all of these things are aimed at getting better, cheaper, faster payments and more transparent payments whether it's in US dollars or whether it's in Bitcoin. And to your point, I agree. It's an on-ramp, Trojan horse, whatever you want to call it. People, once they get comfortable with the idea of interacting with a wallet, they will, it's not that difficult. It's not a big step to get them to self-custody. And we're doing some very interesting things at Custodia to abstract away some of the complexity, because folks are going to want to experience an online banking type of experience and yet not fully take responsibility for self-custody. We're going to be doing some really interesting things on that front.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
I'm excited to hear about it. And Caitlin, when you eventually inevitably get the banking charter, you deserve some type of medal for everything you've had to go through for the industry. So I applaud you for that. But let's talk about the significance of the Genius Act, because we did get a win, Caitlin. We got something, right?
Yes. It's coming. It's going to pass.
So
it's going to be enacted into law. Yeah.
So, and of course, shout out to Senator Lummis's team. I was watching that like a sports event just to see that it was going to get to the 60 votes threshold. And I was like, and then Elizabeth Warren, on the Senate floor with her arms crossed.
Oh, that picture of her was it was such a meme made picture, wasn't it? It was great.
It was fantastic. And she was upset.
She was so mad. Right.
So
she's sensing the control of everybody's personal financial transactions slipping through her fingers. Yeah.
It's slipping. So what is the significance of that? We have to celebrate our wins, all right?
Yes.
Few and far between, but we got to celebrate our wins. So what is the significance of the Genius Act passing? This is Simply Bitcoin, so a lot of our audience are Bitcoiners.
Sure.
Guys, I've been telling you this. I've been saying this for over a year now, that, stablecoins are a Trojan horse for Bitcoin. I've been making that argument for a while. Caitlin is making that argument as well. Because we get a lot of people in the comments like, Nico, like, what are you talking about? And I'm like, guys, you don't understand. So I'll break it down like very simply. If you're in Latin America, I'm originally from Venezuela. If you get a $100 bill, it is like the equivalent of gold. It is amazing, because you're upgrading from the Bolivar to fiat. But what you don't realize is that, the dollar still suffers from the same issues as the Bolivar, but it's obviously a massive improvement.
Yeah.
Because simultaneously, you're getting exposure to a digital wallet. So you don't have to go into a bank account. You could just download an app on your phone. And then where does that lead?
Remember your 12 seed words in your head and cross a border, to Nassim Taleb's point in the introduction to Seyfedin's book. Where does that lead? A massive upgrade in financial freedom and in the cost and efficiency of finance. Most folks don't realize that when you swipe in the US and in Europe, you're using a card. Oftentimes it's a physical card, sometimes it's a virtual card on a phone, but you're still using something that touches the Visa and MasterCard network and Discover networks. And ultimately those profits end up going to traditional banks. And it's, 3 to 5%. A lot of businesses, I was listening to John Castamanides, who runs the Gristedes grocery store chain in New York, where I used to shop all the time when I lived there. And he talked about how their margin is 1.4%. And, they're paying 3 to 5% to these card networks. I think those card networks are going to see their margins go down. But it's kind of funny, because what I see the card networks doing is doing a pincer move on the banks. because the banks have been earning the spread income, but stablecoin issuers earn spread income. And so by getting into the stablecoin business, what that's going to do is take those 3 to 5% margins, that some of which go to the banks ultimately, but the credit card companies they recognize those margins are going to go down, but they're grabbing some of the margins that would otherwise go to the banks. That's what's happening right now with Visa and MasterCard getting so involved in stablecoins. I think they're going to be ubiquitous. When Citi put out its forecast of 3.7 trillion by 2030, I dug into that. And you look at FedWire's 1.1 quadrillion of payments. ACH, I think, is 85 billion a year, or trillion a year rather. And then cross-border, something like 280 trillion a year. Those are not precise numbers, but directionally it's right. The vast majority of the quantity of transactions goes through ACH, and then the vast majority of the value of transactions goes through FedWire. Both of those are 1970s technology. SWIFT is 1970s technology, right? So did you need a blockchain to upgrade the US dollar? No, I'm using a phrase that people kept asking back, 10 years ago. Why do you need a blockchain for this? Well, it turns out that blockchains are really good tools at building network effects. And no, you didn't need a blockchain for it. If all the intermediaries had been willing to tear down their walled gardens and implement in a consortium format better technology, then it wouldn't have to be the blockchain technology that's doing it. But the blockchain technology is what built the network effects. So this is going to take over. I think this 3.7 trillion, compared to the numbers that I just gave you about the totals that are running through these 1970s technology platforms, we're going to blow way past the $3.7 trillion number, I think, by 2030 in stablecoin volume. And it's just under 300 billion right now. So it's not even 10% of that. So that's a rapid growth rate right there. But I think it's just going to cause a massive consolidation wave in the banking industry. The old traditional banks that do not have technology upgraded are going to suffer the most. The ones that are most tech forward, I think, are going to see incredible opportunities to step in and grab technologies and customers, especially young users. I thought Jason Slaughter's Paradigm put out last week a really interesting tweet thread on a survey that was statistically significant that showed that the younger generations in the United States are getting crypto accounts before they get bank accounts. They may never get a bank account. So there's no question that the banking industry is going to have to do something here. And that's what's cool about Custodia and Vantage. We're working with a traditional bank. They are a traditional bank. But they've embraced us as the technology provider that will power the front-end technology for them to distribute this and to build a consortium of community banks. I have never been one that thought Bitcoin would completely do away with banks. Even Hal Finney said,
I was about to say that. I was about to reference that.
Like there will be Bitcoin banks, and that's what Custodia believes in. You just have to make sure they don't rehypothecate, and Custodia does not. We are a non-lending bank by law.
And let's talk about that, Caitlin, because I think you buried the lead there. You're 100% fully backed, right?
Correct.
And I think we were talking about this earlier on an earlier podcast, but I'm just throwing this out there. I'm not saying anything with 100% certainty, but perhaps that might have been some of the motivations as to why you didn't have some fans.
Yeah, well, maybe it's well, let's put it this way. I did have a conversation with a very, very senior, someone who was at the table at the Fed, who told me, I asked him what really went wrong. He said, you did one thing wrong. You had one sin, your original sin, crypto. And so that was consistent with what we've all heard and seen, that we were targeted as an industry, and they weren't interested in that Biden Warren crew wasn't interested in any of us surviving. So, so we'll see what happens. We did survive. I really feel, and especially just over the weekend, more news is coming out. One of the bankers that said they were in the boardroom when the regulators pressured Silvergate to liquidate. Boy, I would have loved to have been a fly on that wall, because I think we all know something untoward happened there. And the funny thing is, sad for some, that touched off a much broader bank run, because it shows you how brittle the traditional banking system is. it should the liquidation of Silvergate should not have touched off a bank run at Silicon Valley Bank, but it happened the next day. There's no question that those two things were connected, right? And so by forcing Silvergate to liquidate, and then it touched off a broader systemic run. The FDIC, I think it was around a couple $100 billion that had to be paid in to make depositors whole. What happened there was very unfair because the Silicon Valley depositors got 100 cents on the dollar, of which one was Circle. So USDC only survived because it got a bailout, right? That was back when USDC traded down to 87 cents. But then since, there have been 3 or 4 other smaller banks that failed. And guess what? Their depositors who had money above $250,000 took a haircut. And by the way, it was Silicon Valley that, got bailed out, and like Oklahoma and Texas and Kansas depositors that did not. This is unfair. This is the kind of stuff that just really pisses people off, rightfully so. Trump has not fixed this stuff yet. And so again, he's got more work to do.
Absolutely. So, Caitlin, final questions. What is your opinion about the strategic Bitcoin reserve initiative by the United States government, or better said, by the executive branch?
Yeah, I'm mixed on it. I certainly am glad they're not selling the Bitcoins that they've taken in from law enforcement. There is a legitimate question whether some of those law enforcement Bitcoins are rightfully owned by Bitfinex, by the way.
Yep, that's
and I
true.
don't know if that is ever going to be resolved. But Biden was clearly just slamming the market to push him out and try to push the price down. Trump has stopped doing that. I am not happy by the fact that they promised an accounting of the Bitcoins that the U.S. government owns and have not.
They haven't provided that.
Correct.
They missed the deadline.
Correct. They missed the deadline,
like
and we don't
ago.
know how much the U.S. government actually owns in Bitcoin. And we don't know whether government officials, we've seen it with the FBI taking off with some of the Silk Road Bitcoins. How do we know that those Bitcoins are actually in the U.S. government's hands? Is there some scandal that we just don't know about yet? And that's why they missed the deadline? And they're hoping this all, gets swept under the rug? There are too many of us out there with too big a megaphones for them to, pull a fast one on us on this one. But it is odd. It is odd. So as long as the strategic Bitcoin reserve is that, I'm fine. I'm not thrilled, although Senator Lummis, it's a big initiative of hers. And of course, she's been great to us. So I haven't spoken out against the strategic Bitcoin reserve. But now we're back to the whole question of, we don't want concentrations of Bitcoin in the hands of people who are not hodlers and who, in the event of a contentious fork, are not going to vote with the true users who truly control Bitcoin. And so concentrations of Bitcoin are bad, regardless of whose hands they're in. They're bad. Because of that risk, we need this to stay decentralized. We need the real power of Bitcoin to be with the users, so that just like with the UASF in 2017, the users can fork off and leave Corpo coin behind, to borrow a phrase from Andreas Antonopoulos, if we ever get to that point. And I sure hope we never do.
The people need to take self-custody and run a Bitcoin node, because if not, you won't have a vote. And it reminds me when you were talking about this, Caitlin, I saw something on your timeline regarding it, but just going to paraphrase here. It says, at the time of our verification, the ARIS and it's blacked out, we're not aware of these 3 wallets. So essentially just talking about different agencies just saying, hey, I don't have this wallet. I don't have this wallet. So that's pretty crazy. And the fact, again, that this was an executive order done by Trump very early on in his administration, we still don't know how much Bitcoin the U.S. government has. Now, my final question to you, Caitlin, is what are your thoughts on Senator Lummis's bill, the Bitcoin Act 2.0?
Is this the one, the Bitcoin tax $600 exemption?
No, it's the Bitcoin Act. I think it's the plan.
The market structure?
It's the plan for the U.S. government to buy more Bitcoin to essentially pay down the debt.
Fair enough. Well, I mean, I have mixed feelings about it, just like I've said publicly about the Bitcoin strategic reserve. it's not wrong that if you invest in an asset that's going to appreciate faster than the US dollar depreciates, that you're going to grow your wealth. That's the concept behind it. However, I am very cautious about concentrations of Bitcoin ownership. I understand why she's doing it. And if it passes, fine, but you won't see me out there cheerleading it on and trying to help it pass. When Wyoming brought up the strategic Bitcoin reserve for the state, I did not help to pass it. I stepped back and just watched the process happen, and it didn't make it through the state legislature.
Caitlin, you're a hardcore Bitcoiner. You know that, right?
Yes.
You want Bitcoin in the hands of the people in self-custody.
Absolutely.
That's what
correct.
you're saying. I love that.
That's absolutely right. And concentrations of Bitcoin, wherever they are, whether they're in large corporates, I certainly prefer large individuals because I tend to think that they would act in their own self-interest rather than in a corporate interest. But it's a good friend of mine, Terry Kibbe, said once that the people on the right are afraid of government power. People on the left are afraid of corporate power. Freedom-minded people are afraid when the government and corporates collude.
I love that.
I butchered it, but you get the point there. I'm a freedom-minded person. I fall into that category. I love what her husband's book was called. Don't hurt me and don't take my stuff. It's a great title for a book because it just summarizes, what the non-aggression principle can be summarized in not so big of words. Just leave me alone. Don't hurt me and don't take my stuff. And so that's the philosophy behind this, and I'm a big believer in that. That's not to say that banks can't build services around it. There are certain groups like pension funds that for good reason are not allowed to custody the assets that they manage because there's been too much fraud and grift and theft in the past. And that's why the Investment Company Act of 1940 was created, was to solve for abuses that took place during the Great Depression in stock portfolios. And that concept is still there. You alluded to it when you indirectly criticize Coinbase. Like, why won't they come out with a proof of reserves? Everybody's watching their wallets, right? But this is the same point. Like, when you're both the manager and the custodian of the assets, the incentives are kind of backwards. That actually, if you separate custody from the management of the assets, there's a lot. You have a dual control structure, and dual control structures do work. And then when you have proof of reserves on top of that, you have a triple control structure. That's the ideal. So it just comes back to what we were talking about earlier, that certain portions of the industry, like a fiduciary portion of the industry, does need a custodian. But for the average person, the most important thing you can do to invest in yourself is to teach yourself how to self-custody your own Bitcoin.
Yeah, absolutely. Caitlin, we're at the top of the hour. First of all, it's been an absolute honor having you on the show. I get the privilege of getting to interview you I think it's like once a year, and I've been doing it for the last 3 years or so, and just
thank you.
Experiencing the Bitcoin roller coaster in this industry thrive and now go into the mainstream has absolutely been incredible. Now, my final ask of you is, do you have any messages to the audience who's watching right now? And where can people find out more information about Custodia Bank?
We're custodiabank.com. And I would just reiterate the message I just gave. The best thing you can do to invest in yourself is to teach yourself how to self-custody your Bitcoin. And if you happen to own it in an ETF or through a custodian or through your IRA, just try to have one eye on that exit door. It's like when you go into a crowded theater and you kind of want to look for where the fire escape is. You want to know that you can get to that exit door pretty fast in the event that something goes wrong. That's the best way for you to invest in yourself, is in the knowledge of how to become a sovereign citizen.
Love that. Well, Caitlin Long, CEO and founder of Custodia Bank, thank you so much for joining me today.
Thanks, Nico. Glad we were able to get together.